Good morning to everyone. It's Mr. Intermarket Analysis again. Okay, so we're going to be discussing the currency pair today is AUS-USD. Okay, so we're going to try and see where this is headed and what are the variables that are affecting it. Okay, and which direction hopefully I expect, well, the market expects to go, not I expect to go, the market expects to go, because we're adhering to price action. Okay, so basically let me just cover the fundamental grounds first of all. The arguments for the Aussie to USD to move higher obviously is based on QE. Okay, so obviously if the economic data comes out, NFP data comes out worse than expected in the afternoon, the Aussie should rally on expectations of more QE. All the crackhead and QE junkies will obviously be dancing around the fire, and obviously their prayers will be answered because they're probably over leveraged anyway and buying every dip known to man. Okay, I'm not going to go into QE. You know my thoughts on QE, how stupid and pathetic our policy is. Okay, and obviously my theory on Mr. Bernanke and the mad woman Miss Yellen. Okay, I tend to call them Hansel and Gretel, the two imbeciles. Okay, so again, so let's discuss the Aussie-USD again. So okay, so basically what are the variables? So obviously the debt ceiling obviously is causing the dollar to have immense weakness. Okay, the downgrade by De Gong and Fitch you see has caused immense weakness in the dollar. The problem is with now is that all the bearish news has been factored into the markets. If you look at the US dollar chart on a weekly basis, you are critical juncture, critical support level, and historically it has been a major level where the market has bounced. Eventually we are headed around to the 77 level, but the 79 level should give us a bounce, and we do have a few gap levels above which need to be closed. Okay, so initially did expect this move here. Obviously this failed given the downgrade by Fitch and S&P. Okay, so we had a massive bearish engulfing candle, so we are consolidating at the lows. Like I said, historical support, so we should get a bounce. The charts, really technical charts, sometimes do give you an advanced understanding of what's going to happen in the market. So given the fact that US dollar is at support, it's not going to be a coincidence that the NFP data does come in slightly better than expected. Okay, just given the fact that technicals generally tend to give you like a forward looking guidance. So from our perspective, obviously if the economic data does US NFP data, obviously employment data expected is around 180,000. The average has been around 160,000. So the average expected based on a survey of economists is around the 180,000 level, hence the reason why the US dollar is catching a bid today. Okay, and obviously the markets are generally moving higher as well based on, I don't know, inside information. You asked me. Europe obviously is quite buoyant this morning, so again we'll keep an eye on this, keep observing this. I've already given my thoughts on where the US markets are headed, where the FTSE is headed, and where the markets are headed in general. I've also given my thoughts on where I think the Euro-USD is going to move. Okay, there's a video on YouTube if you just have a look at a previous video, and that is in concert with this as well. Okay, with regards to the Aussie potentially moving lower. So let's just look at the Aussie-USD. Okay, so the most important chart obviously we start off is on a daily chart, and the daily chart you can clearly see here historical resistance. So you have resistance around this region. Ultimate level will be the 200 MA. But we're yet to see whether that's going to be tagged. The fact that the data came out overnight, Chinese house prices are higher than expected. Obviously, that's going to prevent China to do any more stimulus. If anything, they want to withdraw liquidity. There's already been some comments out in the last 5 or 10 minutes, which have caused a bearish engulfing candle on the Aussie, talking about reducing stimulus, and obviously that's going to hurt commodities and hurt the Aussie especially. Okay, so generally speaking that's a negative connotation on the Aussie. Also the fact that the Shanghai index was down overnight, obviously concerns about withdrawal of stimulus given the house prices obviously rising. Okay, and that's a big taboo in China at the moment. The government wants to curb any excessive house price inflation, so, or house prices itself inflating. So that's a negative sort of connotation on there. Also German GDP was halved last week. The forecast for German GDP were halved last week. The Bundesbank has come out and obviously halved that as well. Adding the fact that, generally speaking, the US data yesterday as well, housing data was pretty weak. Okay, and the fact that the US shutdown has shaved almost 1% of GDP, again, that's negative for the Aussie because of loss of growth, hence the reason why oil prices are below $100 at present. Okay, now with regards to the daily chart, like I said, it's at resistance, historical, and the weekly chart again confirms that. Okay, historical resistance, previous support equals resistance, and it's at the 50% Fibonacci retracement, which generally speaking is obviously a solid resistance level. Adding the fact that you have a death cross there with the 50 MA below the 200 MA, it's a bias signal. This potentially could be a lower high, creating a bear flag scenario, moving lower. Okay. Now the most important time frame, really, from my perspective, is the 60 minutes. Although this is a 4-hour chart, and it's not really showing us anything at the moment other than consolidation. It's a 60-minute chart. 60-minute chart clearly shows that there's a HNS formation brewing. You've got a target on the downside. Head at 9680, obviously show a neckline around the 0.9650 level, and you've got a potential target around the 0.9620 level, and we could eventually break this key trend line support and obviously move to the downside, given the fact that if a stronger NFP data does come out, okay, that will strengthen the dollar, cause a short squeeze, and obviously hurt the Aussie as well, okay, at the same time. So that's basically what we're observing. 10-minute chart, obviously we've been trading sideways. We did eventually break lower. Obviously the PBOC news has just come out just now with regards to draining liquidity. That caused a bear flag. We're consolidating within that red candle, and we should eventually move lower down to the 9640 level again, potentially even breaking lower again. So the fact that the FTSE itself, okay, based on intermarket analysis, the FTSE and Aussie are highly correlated. The fact that the FTSE is at resistance and the Aussie has a HNS on a 60-minute, that's not a coincidence, okay? So that's something certainly worth keeping a note of. Okay, folks, so I'll wrap that up now. Okay, always remember, risk on, risk off, wax on, wax off. Goodbye.